Hey guys, this is Market Update. Are we entering the final stages of this bull market? Well, we've been in this bull market for a few years already. I think at the high, we're up around 600%. Could definitely go higher here. This year has not been great. I think it's just been a massive distribution around 100K, right? You got some tariff tantrums here, but there are some things happening on the horizon that could be quite constructive. So we'll go through that in this video. I've also updated the crypto course with October updates. If you've got the course, they're free for you. I'll leave a 20% discount link down below. If you type BTC at checkout, you can get 20% off via that link. It's like 300 videos on trading, investing. Update it for free forever for existing users. But we need something constructive to happen. I think the market's waiting for that. So what exactly is happening? Well, we have CPI release this week. Now, this is actually happening despite the government shutdown in the US. It's forecast around 3.1%. That's too high. Anyway, the Fed look at PCE, but 3.1 isn't great. However, oil is very cheap, right? I was like $57 a barrel. That feeds into everything over time. And most of the inflation is service side anyway. You've got some weakening from this government shutdown, I'm sure. This government shutdown, not a big deal really made of it. I think probably both sides actually see some benefits from it. Because if the government shuts down, you're going to get GDP just coming a little bit softer. Obviously, that may feed into some employment figures as well. I think that's actually what they want, right? Because what they really want is to kind of soften the employment data a bit, which gives the Fed some cover to ease, right? Anyway, they're going to be easing. So they've already said QT is over. They might do that at this meeting, and they're going to cut 25 basis points. That's what the market is saying anyway. So that's probably a lock in. Now, if the Fed coming easier, that releases some liquidity, right? So again, this entire bull market hasn't been the previous bull markets of rates to zero, money printing, very slow and steady. And that's fine. You can see the 50-period moving average here. Look, we've come into it. That sell-off, we actually hit this, right? And each time we've bounced from it in this bull market. I think it's quite constructive, right? All of this that's happening. So on October the 31st, this is the big one, because I think this is really what the market is kind of waiting for and looking for, which is US-China trade deal, right? If you look at how Bitcoin has reacted for this whole entire year, this was a tariff tantrum, right? So the market hates that. And it hates all of this going on, right? These trade wars and everything and higher taxes and tariffs. Okay, so the market clearly doesn't like that. And the stock market went down as well. And then this was the flash crash from the recent Trump announcement of 100 and plus, whatever it was, tariffs on China as well, which he walked back. And so we've recovered a little bit. Now, in recent days, Trump has been saying, he's been more constructive with China, says, we'll get a deal, right? We want the soybeans, to go back again because China aren't buying soybeans. So look, I think they're going to make a deal, whether it's absolutely amazing or whether they're just going to kind of agree to move forward. What we're really looking for is that to go well. Essentially, if he says if they don't get a deal, they're going to raise tariffs to 157%. And if they do make a deal, it's going to be a fair deal. We're going to get on with China, etc. It's all, bluster, right, before the actual trade. So I get that. So I don't think we're going to get 157% tariffs. If we do, look, the market's not going to like it. Everything's going to go down, stocks, Bitcoin, right? But I think they're going to get a deal. I think we just have to wait for this to get through. And I think a high percentage that we come through it quite well. And the market says, look, we've got through this difficult period and now we can move on. And so we just kind of grind higher. This whole entire bull market has essentially been grinding, right? It hasn't been cut rates to zero and print money type of bull market. It's a real bull market with trade deals. Every move has been fundamental. You had the ETFs, the election, tariff tantrum, calling that off, selling because the recent tariff announcements, right? Everything's been fundamental. So if this is fundamental as well, then I think that's quite constructive, and that's where I lean. That's why my trades are still open. But look, if we're in the final stages, I have to think about starting to get out of those trades. But they're still open for right now. And of course, with my spot DCA buying, I just buy it every week. I'm not selling that until retirement, right? Hopefully. But for trading, look, this I think is leaning positive. But if we're in the final stages of the bull market, then for trades, do you want to start to get out of those, right? Because the 4-year cycle is over, right? It's over because I think the majority of the market is like, no, I don't think it's the top of the bull market. I think it goes on. So the 4-year cycle is over, the halving cycle. The effect that halvings have on the price of Bitcoin apparently is over now. That's what I think majority are leaning towards. I think a lot of people are selling here and taking profits because of the 4-year cycle. If we go to new all-time highs over the next 6 months, then this would be the longest cycle ever, right? And so that would suggest and prove that actually the price of Bitcoin is much more in, following ISM, economic cycle, credit cycle now, versus the halving cycle, which is specific to the amount of supply, right? So I lean on that side as well. I think Bitcoin is becoming more of a TradFi asset, and so it is going to follow credit cycles and economic cycles more rather than halving cycles, right? So I lean on that side too, and that's why my trades are still open. If you trade Bitcoin and crypto, I'll leave the link to Bybit down below as well. You can get a fantastic deposit and trading bonus on there if you're a new user. What I'm really looking at is Bitcoin getting above trend or not. This entire cycle has been very grinding. There's been one time where we got really kind of overbought, which was the ETF's announcement here and that money flowing in. Since then, it's been a very slow grind with kind of not the biggest volatility. And it's just been a very slow rotation of capital, right? And so, look, that's fine for now because the risk reward is still okay if you're kind of at trend. We're slightly above trend right now. But once we start to get above trend, if that happens, then the risk reward isn't there for trades for sure. That's why I have to start to get out of them. And maybe we don't explode upwards. And so if we don't, you have to be more reticent of where you are in the economic cycle. Like I said just now, I think it's still fairly constructive, is why I'm still in trades. But look, if you bought the top of the last bull market right here, the 4-year CAGR of that is 6%, 7%. Right, so that's not a good return if you're buying up here, is it? And that's also terrible if you're getting into long trades there, right? So you have to be very cognizant of that. Now, we're not very overbought, and so still in trades, still okay. Macro still looks okay, so why get out, right? But I'm definitely looking for that because we may not explode higher. This is very grinding, and so if that happens, you also have to be reticent of the macro, which, like I said, looks okay right now. Digital asset treasury company holdings. There's two buyers for Bitcoin in this cycle, right? The ETFs and the digital treasuries, right? So basically selling the crypto to TradFi that can invest in securities, but not these digital assets, right? So you're making that available. These have to carry on. This is where all of the rotation has happened. This entire year can be summed up in as people that held Bitcoin, any single person that ever wanted to sell had a 6-figure 100K Bitcoin price, and the public markets just went, all right, we'll just buy it from you there. We're not going to pay up because we think 100K is your level, and it turned out it was. 100K is the level. Something has to break that, right? Those sellers have to eventually dry up. They've bought a lot, right? They have bought a lot. So as you can see here, the Bitcoin and ETH treasury companies, mostly Bitcoin, right? And it accelerated here. Obviously, you had a big move for ETH here. So you can see when a buyer comes in, the price moves. Now, this rate of change for ETH probably isn't going to accelerate, right? Now, it may keep growing, but the rate of change is what changes the price, right? You had a huge move from like 1,200 to 4,000 because of this. Is that rate of change going to accelerate? Is the Bitcoin rate of change going to accelerate? It doesn't look like it. It's moving slowly, but the rate of change like that won't move the price very, very high, right? We need something to change. We need something like huge rate cuts. They're not going to print money. They are ending QT. They're not going to print money. They're not in that stage. Something has to change, or the buyers have to dry up. At the moment, it's kind of a stalemate. You can see this as well. Realized value breakdown, a lot of selling, a ton of selling. Look how much happened at the last bull market. Right, so you had these waves of price goes up, selling comes in, right? This is just a complete different level. This is a massive rotation, the biggest rotation in Bitcoin history, right? Huge amounts of sellers. Sellers are actually increasing. Are these 4-year cyclers saying, look, the 4-year cycle is coming to an end or it's maturing, right? That's why we can't break this. So something needs to change where all of those sellers have eventually sold out and the cycle goes 6 months longer than usual, and that's where you can get pretty good price action. So on balance, I'm still in my trade, so I think that might happen. But look, for every buyer, there's a seller. We have found the price, right? Lots of selling here. Are these people going to dry out before the bull market ends? No. The whole point of this is that as prices go higher, that incentivizes more people to sell, right? For every buy, there's a sell anyway. But look, it's the price that's important. And so you have to just get through that 100K. You have to get through that mindset of, I'm going to sell at 100K. Once everyone's done there, then you can start to move higher. Maybe the next 6 months, if macro stays okay, that can happen. Liquidity index starting to pick up again. That's good. You need the trade deals done, right? You need a big impulse. You need rates to come down in the States. China wants to ease as well. They're going to wait for the trade deals. I think that's really pivotal. And if that goes well, I think we can just relax and then look forward. And if Bitcoin stays at trend, that's fine. If we get a little bit overbought, I have to start looking to get out of the trades, right? Because overbought means risk reward isn't great for new trades or remaining long. Something has to change to spark us into life and to break us out this 100K purgatory. And I think it's the trade deals. I think it's people looking forward to saying the trade deals are happening, lower interest rates are coming, refinancing cycle, credit cycle just inflects to the upside. That's what we need. And it is there, right? We just have to be patient for it. Look how much Bitcoin strategy we're buying at the tail end of last year and the beginning of this year. You're talking about multiple billions in purchases. 1, 2, 5 billion, 1 billion, 1 billion, 700 million, 500 million. Last few weeks, 20 mil. 20 mil is not going to move the needle, right? 100K is the level. We have to get out of it. It has to be an impulse to the upside. What I mean is an economic impulse, credit cycle impulse. Unemployment claims for federal workers are surging. Ironically, that may not be the worst thing because it then gives some cover to the Fed to maybe get a bit easier. Bitcoin versus the economic cycle, right? This is it now. Everyone's saying, look, halving cycle, that's done. No interest now. It's ISM, it's the economic cycle. Because we value Bitcoin in dollars, of course it is. It's the economic cycle, it's a credit cycle. And the ISM needs to go higher. It's been grinding higher from the lows, and that's the Bitcoin price action as well. Can we get that trade deal done? Can we get rates down 200 basis points and put this up to the top of the range? Yeah, I think it can happen, right? Look, these are the scenarios, right? Bitcoin is no longer correlated to macro. 5% chance. I give that maybe, there's no chance it's not related to macro, right? It's a macro asset now. We're headed into an imminent recession. No, I don't see that because the Fed is cutting, right? Financial crisis, is it happening? I don't think so, right? I think the Fed are in control of this. If things start to fall apart, they can drop interest rates, right? If we are going into a rate hiking cycle, that's not good, but we're going into a rate cutting cycle with a trade deal on the horizon. It's really important. There's still plenty of runway for macro and therefore plenty of runway for Bitcoin, 80% probability. I'm, in line with this, right? We are a macro asset and the Trump admin wants this to inflect to the upside. The Fed's cutting interest rates to try and get this as well and just waiting for the trade deal, which, look, we have to consider that going pretty well, I think. Delinquency rates, the credit cycle is actually improving. You can see here, that's what we want, that's what we need. Default rates on loans, actually coming down a little bit. That's not the worst, right? You're out with charts arguing that the credit cycle is actually improving. Well, if interest rates come down, then the credit cycle can improve, right? That's the whole point of this. Bitcoin and credit cycles. We're grinding up in the credit cycle, grinding up in Bitcoin. 50% of the way there. If we get up here, selling out my trades. Right here, I just have to stay in. I'm not going to get bored out of my position, right? A year of basically sideways. Okay, that's fine. But if we're not up here, then the risk reward is got to be still okay, right? I've got a 20% discount on the crypto course this month. If you type BTC at checkout, updated for free forever, and you get 300 videos on how to trade, invest, how to use DeFi, a lot more in there. And if you want a deposit and trading bonus from Bybit, that link is down below as well. I'm James, this is my DG. Cheers for watching, and I'll see you in the next one.